This week's episode, I'm gonna talk to you guys why I stopped trading options. Trading options have been a complete disaster for me. Like, it's been bad. I'm not trading options for a while, I can guarantee you that. So some of you might know that I purchased Cronos in the summertime back when it was $7 a share. Actually, I think it was like 5, and then I averaged up when it was like 8, something like that. Either way, I was able to get an average price of like 7 something a share. So when the stock price hit $22 a share, somehow I was able to cash out on that. And I think it hit like 22 a share, maybe a few times before it just kind of stagnated at 20. But anyway, out of that, I was able to get 200% gains. Like, that was crazy. I was like, 200% gains, let's go, baby. But little did I know, that's when things started going crazy with me and trading options. Okay, so pretty much my portfolio consisted of, so I would have my long stocks, and then I would have my speculative stocks. And each of these would be, so I'd have 8 stocks in the long category, and then I would have 2 stocks in the speculative category. And I figured if I have 2 in the speculative category, because they're highly volatile and they could go way up, they could go way down, it won't affect my portfolio that much. And I'd have 8 long, like for example, like Microsoft and Pfizer and stuff like that. So high dividend companies that have been around for a long time. But the problem was I would pile so much money in my speculative stocks because it's more interesting, right? These stocks are kind of boring. They're just dividends and they just sit there and grow slowly. These are like, oh shit, it's starting to move up like crazy. And that's what happened with Cronos. So what happened was, all of a sudden, Cronos had 200% gains. It had 200% gains, and I was like, this is crazy. So we're not gonna talk about Fitbit right now, but we're gonna talk about this, Cronos, and what I did with this 200%. So Cronos was like this. So with my 200% gains of Cronos, this is how I distributed it. I put 100% of this 200% over here on Fitbit ER. So it was Fitbit earning report. I guess I could put that up here. So I put 100% out of this 200%, so half of this, I put towards a call. So that was a call. And then I also put 50% towards Tesla call options. So this was a call too. Starting to blend in. You get it. And then I also put 50% towards a put. And now this put was on a rando stock. This was on a rando stock, and it was also a naked put, which means I never owned shares of this company, and I literally just saw a potential opportunity to short this stock, and I said, screw it, let's throw 50% of these gains and put it towards that rando put option, and let's go hard or go home type of deal, right? So what had happened was the Fitbit earnings report was doing amazing up until they released their earnings call, and then apparently guidance was bad. So this 100%, so half of these gains right here got wiped out. And then the call option, I was like, oh, this is definitely got to go up, right? Because I own some Tesla shares, but I haven't owned it for years like I did with Fitbit, so I'm still not too familiar with Tesla trends. I kind of knew that Tesla was one of those stocks that's hard to predict, but I really thought I had something. I was like, oh, it's gonna go up. There's no way. And it didn't go up. And this random one, that was completely stupid of me, because first of all, it was a naked put option. I don't short much, which inexperience there. I don't know the company, and I put way too much money on it. And then so that wiped me out because it didn't go in that direction. So literally every single one of these trades went bust, and I ended up losing my entire 200% gains that I got off of Chronos. So I guess it was a lesson learned here. Okay, so after that disaster that happened and I lost all those gains, I was like, okay, time to rethink your strategy. And clearly trading options and going hard like that is not for you. So now what I do is I have 78% in the long category, which is the high dividend stocks, the ones that people consider safer stocks. Then I have 20% of my portfolio that make up speculative stocks. And that includes that, for example, Chronos and Fitbit, right? I'm not just limited to 2 speculative stocks, I'm limited to the 20% of my portfolio. And the cash reserve section. So with my new portfolio setup, I'm now able to trade options, but at the same time, if I want to go hard, I can only go hard with 2% and go all in with 2%. So that way, if I lose it all, it's only 2% of my portfolio, and I won't take such a massive hit like I did before. Where before, I was just kind of like, let's go, keep putting money in, all that stuff, and it was horrible. It was miserable. So yeah, this is how my new portfolio is set up, and it's kind of set up to hedge loss in a way. That's what I kind of feel like it's set up to do. I'm just completely lucky that I wasn't traded on margin, and I didn't end up losing any of my initial capital that I put in my portfolio. It was simply the gains. It still sucks, don't get me wrong, but it's not that bad. And I personally think it was a lesson learned. And I'm trying to adjust my portfolio and trade differently based off of that crazy ass loss that I did. So, yeah. All right, so if you guys like my video, don't forget to like and subscribe. And I drop videos Fridays and Mondays. Mondays tend to be my marketing videos. Lately, it's been cold calling videos. So on Fridays, I try to do an update on my business or an update on what I'm doing in the stock market. But yeah, peace.
Up.